Hello, everyone, and welcome back to another show of Around the Coin. Today, the three of us are going to be discussing the unbanked, the 2.5 billion people across the world that do not have bank accounts. We'll be talking about why they don't have bank accounts, what technology is out there that is going to come help them if they need the help, and all other surrounding topics around the central concept of the unbanked. For so many people in the West, we take banking services for granted, not just the West, but I'd say it's almost a class differential. And I think it's appropriate to give attention to those who don't have it. So my name is Mike Townsend, one of the co-hosts. Brian Fessel are joining me today. Guys, how are you both doing? Brian?
Hey, how's it going, guys? Good to be here. How you guys doing today?
Doing well. This is Faisal Khan. Happy to be online.
Yeah, so Faisal, I'd almost pass the mic to you first. Do you want to give us a brief overview from your vantage point, having been in the banking industry for quite some time, prolific writer on Quora, 5,000 plus answers I think you have now with, 6 years running of a top Quora writer around banking. And I think the unbanked is one of your really specialties or areas of real expertise. And I think it's also worth mentioning, as we mentioned before, but your vantage point having grown up in Pakistan and in parts of the world that I just don't know too many people in is really, it's always interesting to hear your anecdotal story. So yeah, I'll let you take it over.
Oh, thank you. The unbanked is not a phenomenon that is, let's say, in the developing world only. It's in the developed world. In the United States, as many as 80 million people are unbanked. And, in Europe, the number varies. I've heard numbers as high as 120 million. Some people say it's about 75 million. And, in the rest of the world, the number is pretty high. All in all, as per the World Bank, and again, it depends whose report you're listening to and reading and what have you, about 2.5 billion people are unbanked. Now, that's a serious number. And so these are 2.5 billion adults who could have been banked but don't have a bank account. And there are many reasons and avenues, and that we can discuss, and forks in the road. Why they are unbanked. Is it because they are absolutely below the poverty line and it makes no sense to bank them? Is it because they are being discriminated against for some reason because of the socioeconomic class that they belong to, or the socioeconomic statistic that they are slab that they fall under? Is it because, they are not making an effort, or the government is not doing a good enough job? Is it because, the banks don't have a product for them? Their one size fits all did a good job for most of them, but getting out to the remainder, maybe new products need to be made. There are many arguments. It's an open challenge these days to go and find solutions. There are many companies, grants, government efforts, etc., that are being done in this drive to say, okay, how can we get this bottom half, or these 2.5 billion people into the banked world? And it's not easy. If you just look in the United States today, it's because they are deemed unbankable for many reasons, and one of the reasons is that they live paycheck to paycheck. They hardly keep any money in the bank. They use the bank merely as a means to cash their check, step into the branch, deposit the check and take the money out the very next day. The average overnight balance on the month might be something like 30 cents or maybe 50 cents. And, so it is challenging. Why should Bank of America bank that person? How do you change it? How do you make given that the United States has so many banks, like I think over 9,000 banks, why aren't they going for that challenge? And why is it then how are these people getting banked? Why is it that they're going after prepaid card services? Why are the prepaid card service providers and the payday loan providers and the check cashers providing them with pseudo banking services? Why haven't the banking industry been able to do it? So many questions. I'll open it to Brian and yourself, and we'll kick it off more.
Yeah, I'd almost propose the question to the group here as to what is the specific problem to solve? You know, what exactly is the problem at hand that is the challenge that we, collectively should work to solve?
I mean, from a government point of view, it is about taxation, right? So the more people you have banked, the more they come into the tax net, and so forth. And and digital money is better than physical money, etc., etc. It can go faster. There are many arguments on this thing. There are many for arguments on this thing. But the fact of the matter is, if you go to the rural areas in many of these countries, in India, Pakistan, Bangladesh, Ghana, Tanzania, Nigeria, DRC, Burkina Faso, the people are living hand to mouth. They can barely put 2 meals a day on their table. And you are trying to tell them that, hey, brother, if you were to get this mobile app and bank and become bankable, things will get better for you. I am not sure that that's a valid argument. I'm not saying that they shouldn't be banked, that they should be excluded, but I think that that's not a valid argument. I think that a lot of the countries have now decided one thing. Rather than saying, let's make them go from unbanked to banked, let's stop in the middle. Let's insert a new variable. Unbanked and educated. Unbanked and then banked. So let's educate them. Let's do a massive, massive drive over the next couple of years on what advantages it has to be banked. And maybe once they understand that, they'll be able to see the difference, the A and B testing, the A being unbanked, the B being banked, and then they'll say, you know what, maybe I'll take the decision of being banked. But bluntly going to them and saying, hey, listen, just bank you, they may not understand it.
And do you think the word banked is the correct word? I mean, does that accurately describe the?
We have a more politically correct word for it. It's financially excluded and financially included. But at the end of the day, I mean, let's not water it down. It means banked or unbanked, right? What does it mean to be financially excluded? You're excluded from the financial system. What financial system? The one that's controlled by the government? The one that's under the purview of the taxation net? They're still dealing in money, unless you're telling me that these 2.5 billion people are not dealing in money. They're dealing in money, for sure. They just are not banked. They simply don't belong as a customer of a commercial bank.
Yeah, that makes a lot of sense.
I think the question is what the purpose would be for an individual that currently is not in a banking system to become part of it. If it's in the sphere of their life, I believe that they're already in the banking system. If it's not in the sphere of their life, meaning they don't have to cash a check and they don't deal with finance and level, they haven't been brought into it. It's also generational. It's bifurcated by age group. You can sort of look at it from the perspective of how China's dealt with it versus India versus Africa and South America, for example, in some of the more economically challenged areas. It comes down to this. What function are they trying to perform? Is it to transact in an economy that's primarily becoming electronic, credit card and debit card? Perhaps. And there's a good chance that, for example, in China, if you don't have access to a QR code reader, that you're going to be essentially excluded from the ability to do almost anything in a major city or even some of the smaller cities. So in a space of about 10, 15 years, China went from primarily a paper and coin economy to a QR code economy. And one could examine all of the reasons why, but it's being centrally directed by the government primarily, and also by the proliferation of very low-cost electronic devices called smartphones. In other parts of the world, it's not as well centrally directed. And, the banking in the West is primarily the granting and issuing of credit, is really what it's all about. When you're cashing a check, you're being issued credit. That check is not cash. It's being cashed. And there's a float period, and that float period is based upon the region you're in. But that's the realities of the situation. So when you are being brought into the system, there's a risk analysis. And a lot of folks forget this aspect. Now, even when money is moving fairly instantaneously, there's reputational aspects that have to clear. Who are you? How do we trust you? Finance is built on reputation. And so when we examine this question, we have to examine the underpinnings of it. Why would somebody that is not in a banked economy come into it? And generally the knee-jerk reaction is it's to avoid taxation, or it's because they're too uneducated. And I suggest that that's not necessarily the whole story for not a majority, but a reasonable number of those individuals. They are really just transacting in the payment system that they're used to. And they don't really interact with this payment system that most of the West is used to. And when they need to, they will probably connect to it on their own level. But banking, when we say the unbanked, a lot of folks saying, well, okay, is it really, what is it? Is it holding money? Well, then there's trust there. The individual has to trust the organization. How are they holding money today? And a lot of people, this knee-jerk reaction, it's money in a mattress. It's really not. It's a commodity. And there's more complexities to this, but realistically, it's not a problem of these individuals as much as it becomes a problem when they're being confronted with, say, here, I'm going to pay you by check. Oh, by the way, you don't get a bank account, and therefore you're stuck with third parties who have absolutely no interest in being fair and equitable with your money. And these are payday loan companies. And the element of the payday loan company is very insidious. I mean, a lot of folks don't understand what it really is about. It's about the idea that they start at these places very innocently, and that is, I need to cash a check. I can't cash it at the bank. In the old days, you used to go to almost any bank, and if it was a known company or a known employer, even if you were John Smith, you could cash that check and get money because the reputation of that bank account holder was big enough that they knew that that check was good. You can't do that anymore. That went away with a whole series of banking law changes, KYC, know your customer, on and on and on. And that perpetuated the rise of the payday loan. How did that happen? Well, I need to cash a check for, $500. Oh, okay. Hey, how would you like it if I give you $700? How would you like it if I give you $700 now? You can buy that car, or you can, do these other things. So the credit was granted without really the education or even any of the other things that would normally come along with credit that most people are facing with. And that's where people got taken advantage of. And then it became a never-ending cycle where essentially you are 5 paychecks. A lot of payday loan places are anywhere from 3 to 5 paychecks deep, meaning that they owe 5 full paychecks to the payday loan company for stuff that they probably really didn't need, and it probably wasn't an impeding emergency, and it's at unbelievably high usury charges. We're talking about something in excess of 49 to 69%. So that's where this all kind of started. How do you guys feel about that element of the payday loan?
What's the right word? I'm lost for words over here, so, and it's not a good word that I'm looking for. It's an industry that is known to take advantage. They're like vampires, right? They just suck the blood out of you. And I think you're being and when you say 60 to 70%, I think that might be 60 to 70% per month on a yearly basis. They're just way, way, way off. And there was some statistic put out by PayActive, which is a company that basically gives you just-in-time money. So, it's like your paycheck is due to you every 15 days. What happens if I need money on the 14th day? So, you have basically 14 days of money sitting with your employer. You should be able to take it out. And that's what PayActive does. But anyways, I digress. So one of the things was that, to take a $400 loan, they pay back $570. $400.
Oh, yeah.
Of their own money.
Absolutely.
So that's a serious number. And there was also another statistic that most Americans, and it's easy to relate to Americans than let's say some person in Burkina Faso or what have you, is most Americans are one incident away from literally being broke to dead broke, maybe even being homeless, maybe their savings wiped out. That incident could be a
Absolutely.
unknown medical charge, right? A car wreck, being laid off at the wrong time during the, let's say, the holiday months or what have you. So payday loans, they don't care. They will just, it's the Shylock equivalent. They need their pound of flesh. So I don't hold them in very high value.
Exactly, and that's the area that I think that we when we talk about unbanked, that's the area where I think there's critical consideration to be made. I don't know about the other areas because people form their own financial solutions, albeit maybe not perfectly, based upon the demands of the situation. And if you go to some cultures, I mean, outside of westernized cities, things are moving along quite nicely. And obviously, we're in a business of being in business. This is what the show is about. We're talking about banking and the banking business and technology and how can we apply technology to solve the problem. My only thing is there is a problem to be solved, but it's not as big as a problem as some people might imagine. And
or severe.
But the problem that does exist in and of itself is a problem and should be dealt with. And there are laws and there are rules and there are regulations, but there are still people being taken advantage of. And some of this has to do with flight capital, money moving in and out of countries and companies, et cetera.
Brian, one thing I want to bring up, you mentioned earlier, just walking through the line of logic from the unbanked being that the interest of the banked, the bank specifically, is to get information about the customer to determine if they're a good customer, namely the credit score. And in the United States, we have three companies, Equifax, TransUnion, and Experian, that are effectively chosen by the government to manage these data points. They integrate with services like banking services and credit reports that generate a score. I think it's 800 is the highest you can get, and it's it's just a number. And there is a number of companies out there now that are effectively building this similar concept on the blockchain. Bloom and Colendi, Colendi, are two that come to mind. And they effectively move it from a centralized, government-chosen, privately managed system to a completely decentralized system that, you'd have your private key, just like moving money around. You have an ability as an individual to choose who you give access to. If you want to give access to a bank to run a credit report, you can do that through a decentralized platform. But seeing those companies start up give me a real feeling that there's going to be a resurgence from the unbanked because they now have access to decentralized credit reports effectively on the blockchain. And if that is something that's much cheaper, much more effective, widespread, it seems like that could introduce a new system or a new industry of banking services that integrate with the credit reports that are decentralized.
Exactly. And I think it's really a proper growth of blockchain technology and decentralization to allow somebody to present their credit history on a need-to-know basis to individuals and corporations. I think giving the power back to individuals to unlock that is probably more important than the system in and of itself. My only challenge is we're now starting to weave social media and social presence and who you are online as a signal to how worthy you are as a bankable individual. And it sounds
interesting.
It sounds neat. It sounds so high tech, and it sounds like it's a great idea until you look at the arc of history, until you look at its final result. And the final result isn't very pretty. The final result essentially makes you have to maintain a social responsibility online that is equivalent to what's acceptable in the epoch that you're living and in the place that you're living at that period in time. And that is a moving target. Today, it might be that you are, you have decent friends. You have real friends on social media and you interact with them and you have pictures that are appropriate, nothing too crazy. But of course, you're not outside the realm of, the average person. You're not doing anything that, society, if they had a vote, would find it questionable. But then later on, it just starts sliding into another direction. It starts sliding into, well, we don't like the places that you've visited, or we don't like the people that you've liked. We don't like the people.
Well, Brian, that is one way to look at it. You could critique the individual for the quality or assessed subjective quality that they post. But for the unbanked, it could be, hey, you have a network of, on Facebook or Twitter or you name it, you have a network of 1,000 other people, and those collective scores for those people are respectable. And so while you may not have any banking information or any credit history on TransUnion or any centralized database, we can pull a decentralized network that is, we know it's not, or we have a very high confidence that it's not faked. For you to create 2 social media accounts and maintain connections to 1,000 people, maintaining 2 identities is really challenging / becoming impossible. So I see it as less about the content that an individual posts and more about the network that they have that speaks more to the perceived credit that they can get.
I already have AI that can establish this stuff. It's not difficult, and I do it on Raspberry Pis. You can pretty much look at somebody's social network and you can derive a tremendous amount of information from what's publicly out there. And I'm not Facebook. I'm a guy in a garage lab. So it is not beyond the realm of possibility that one can draw reasonably good inferences from the social circles and the concentric circles that form around them. What I'm saying is, that's a great signal until that signal starts manifesting in different ways, and it's used as a tool to edit that person or to guide that person from certain behaviors. And that's ultimately what winds up happening when you have systems like this. So when we talk about this blockchain as a new technology and it's all great, we also have to look at, as we create new technologies, how about not duplicating some of the problems that came with the prior technologies? How about looking at, is this going to be fortifying humanity or maybe short term might give somebody credit that they didn't have before, but long term, the result is that everybody is in a much tighter realm of what they are allowed to do in a public space anymore. And this is something that's very concerning because it's something apropos to what's going on in the world right now. I mean, right now we can look at just the headlines from China, to United States, deplatforming people, all sorts of things that are starting to take place in this new economy that we're creating. And we're talking about it. We're promoters of it. We should also be aware that there is a way of it unless we talk about it, unless we objectively turn the light on and say, okay, we're going to take these unbanked folks and we're going to put them into this system of grids. And we're going to use these new systems to understand who they are. But if they get out of line, we're going to pull the plug from them and they don't get to be in the system any longer. That's unfortunate.
I'd only say that the out of line aspect is, so say collectively you have 1,000 people in an area that's, unbanked, no technology. The first thing you introduce is a technology to indicate the social connection. So Facebook is the number one application when people first get access to the internet and they first get a $50 or $100 Android phone. They have Facebook, they establish social connections. So now you have this network, and what you could do on top of that network is to establish a reputational score or credit effectively for those who are more likely or less likely to contribute back, pay back a loan that they get. So say as a network of 1,000 people, each person were to invest $1. So now you have a pool of $1,000. Now you have somebody in the network who wants to receive a $50 loan. Well, that person has a credit score based on the network score that they have. So that there, you could have a system that's frankly automated based on the varying level. You could have different systems and different risk tiers, but that money is automatically given to that person. And then if they don't pay back the loan, or if they're late in paying back the loan, then everyone suffers a little bit, but no one suffers a lot. And this is the system of banking. This is what banking is. Only a bank is controlled by people who make subjective decisions using templates and policies and procedures, whereas you could move it to a completely autonomous system that uses the collective ranking score of people in a network.
This was the premise of the local savings and loan, and you can look at It's a Wonderful Life to get a flavor of the bank versus the savings and loan story. We conflate the two quite often. And the savings and loan was very simple. I mean, people did not have home ownership at the turn of the late 1800s, early 1900s to a high degree in the United States. And collective groups of like-minded individuals decided that they trust each other. And sometimes it was prior national origin. I mean, Bank of America was established by an Italian immigrant because he was being discriminated against, and he decided to help other fellow Italian immigrants, Asian immigrants, Spanish immigrants, Mexican. It went on, but the idea was we were taking the quote-unquote unbanked and we were giving them a place. The thing about it is, the thing that made the savings and loans so valuable is that you knew the people who contributed. You knew that just like in the movie, hey, that's Bob. Bob, you put your $100 in here and you help Bob help pay for his house. And now he is paying you back a little bit over time. And when you create this sort of banking, and it's, again, that's why it's so hard to describe what banking really is, because there's the banking that most people think they understand, this, semi-neo-Grecian columns, or, some app, or, some great logo with the right colors. Or we're talking about this idea that individuals who know each other, that have some kind of interconnection, are self-supporting. The problem is when you put it in the electronic realm and you have individuals who don't really know each other, and there's no physical responsibility. Like, you can't go down and say, hey, Bob, get out of the bar, go to work, and start paying your bills, or we're going to get angry with you. That would happen in some of these small towns. There was a responsibility feedback system that does not exist today because it's not allowed to exist for a lot of reasons. But, a group of guys would get together and straighten Bob's butt out and say, hey, get to work. You got a mortgage, you got a wife, you got kids.
Well, yeah. Well, you could look at it from there's a way to address that negatively, which you could threaten that person. You could put signs on their doors, and if you had a network of people who are incentivized to have that person pay back collectively, there's a desire to have that one person who owes the group contribute back to the group. The other way, which I think is more naturally evolved, is that the group wants to help that person. So why is that person not able to pay back the loan? Is it that they lost their job? Is it that they're depressed and can't get out of bed? And so the group could invest in in a focus or an organization that helps that person get integrated back into the system, instead of leaving that person out to dry and saying, okay, if you don't pay back the loan, we're going to fine you. The group is now incentivized to pull that person back into that local economy. And I think that's the beautiful system of it.
And it worked. It worked wonderfully And when banking moved from hyper local to regional to national and international, all of those feedback mechanisms were removed, and they were thrown back into essentially laws. And laws are the final result of somebody's action. Unfortunately, if a person, a primary breadwinner, is no longer able to produce wealth for the family, and they're falling back on their notes and their mortgages and whatever, basically after a while you lose your stuff. Back in that era, yeah, there were bill collectors, there were all kinds of things. Some of it was good, some of it was bad, but on the average, most of it was pretty in tune with the culture of that particular area. And it worked exceedingly well. In fact, it created the middle class of the United States. When you really want to examine the middle class of the United States and the rise of that, it was because we had tight-knit communities that watched out for each other. That no matter where they came from, this had nothing to do with their prior ancestral lands. They were in a community and they looked out for each other as a community. And we don't have that really very much in the West, certainly not in the United States. And I think it's a joke to try to say it's going on in Europe. Europe is actually more bifurcated than the United States in some ways when it comes to this, But, you do see it in some cultures. In the United States, there are some cultures that help finance individuals to become citizens in the United States by taking over certain segmented industries that were highly labor intensive. And I discovered that early in my career: the motel industry, the convenience store industry, certain restaurants, certain ethnic restaurants. A lot of folks don't understand that there are only 4 Chinese restaurant menus that are produced in New York City, and there are now there are 4. There used to be 2 Chinese restaurant chef schools, and you would go to these. You would come to America, go to these schools. You were financed to come to America. You would learn the Chinese restaurant menu of the chef school that you worked in, and then you would be dispersed to a Chinese restaurant somewhere around the country, and that's how you would find your way into citizenship. And it still goes on today. Most people are fascinated fascinated that still happens, but and that's all interconnected communities that are self-financing. And I don't know how tech works with that. These are mostly unbanked individuals, and they're using a trade or a skill or a knowledge base to enter into their American dream, so to speak.
And those, what you're effectively referring to are just relationships, and relationships originated in person, but now are largely remote and online. There's people that I have great relationships on social media, different platforms, and many, this is a truth about the fabric of society today, that there are social networks or groups of relationships together cohesively that exist purely digitally and often not even close to each other geographically. And so I think that those networks are valuable for the sake of the banking population, which is just on the precipice or just starting to become realized with, I think it's really sparked by Bitcoin and decentralization with the blockchain as a concept being introduced to the world. And then you have companies that build on top of that. And then you'll start to have early adopters or early communities of people jumping onto there. And then it becomes like a snowball effect where we realize TransUnion, Equifax are just they're not the end state of an advanced civilization. As we've seen, they got hacked and the data's corrupt and it's all exposed. It's a massive security breach. It costs a ton of money. And also you don't allow for innovation in the space because the government dictates who should, which companies should be allowed to do that. So I guess long and short of it is I'm very bullish on blockchain being the technology that sparks the benefit of having a network of people that can effectively provide banking services to each other digitally and distributed and in a very trustworthy way. Not to say that it threatens the existence of banks, but that it enables the lowest class or those impoverished or just unable to obtain banking services much easier, and that becomes the early adopters of this technology, which I think is really exciting. I mean, that really is a positive outlook on the world for sure. But Faisal, I'm curious to hear your take on that. If you are as bullish as I come out to be, or you view it as like an incredibly long game of politics that ends up disrupting that utopian vision.
No, I mean, for sure, you and Brian were talking something that I just can't relate to. I think it was just way too American, way too utopian. I'm being very blunt here.
I agree.
The basic underlying factors are you have to understand subcultures in sub-Saharan cultures and the Muslim cultures and the GCC and Iran, Iraq, Afghanistan, Bangladesh, Pakistan, etc., India. Spouses are not, the wives, they don't have a phone. They're not allowed to have a phone. So okay, let's say they have a phone. They're not certainly not allowed to have a bank account. So they automatically add to that number of that 2.5 billion, right? What about the parents? What about the unemployed brother? What about the grandparents? They don't have, but they're counted in that 2.5 billion. So that's A. And I was very intrigued when you were saying, your theory about social interconnection and social scoring mechanisms. That's how microfinancing banks work these days, in case you don't know. And that's how ROSCAs work. ROSCAs, ROSCA stands for Rotating Credit and Saving Associations. That is basically, could be a zero interest, could be a 1% interest, whatever. But it's basically a communal system where everyone pools in. Someone gets to take the money that month. So if there are 10 people pooling in $100, there's $1,000 in the kitty, person A gets it today. In the second month, person B gets it. In the third month, person C gets it until all 10 are completed and everyone gets it back. So that's how ROSCAs basically work. If you take the ROSCA element and implement or put the spices of banking in it, it becomes a microfinance bank, basically. And again, it's very regional, very, very, very geographically limited. So providing access to banking is... there are genuine issues as to why that number is as it is. Like I told you, in my opinion, the housewives don't get it. The sisters are not allowed to have a bank account in certain cultures, right? Like the parents, the grandparents don't have one because they never had a need to have one. But they're all counted in that statistic. So how does that thing? Now, if you tell me, well, we will bring the blockchain in, we will decentralize it, etc. Yes. Technology may certainly solve it for certain segments of society. For example, if there is I don't know, Japan or South Korea or Australia or New Zealand, yes, you could say, okay, we are going to implement such technology over there and take care of the unbanked, even the United States. But how does technology solve the discriminated ones? What if I don't want you in my restaurant? What if I don't want you in my cinema? What if I don't want you in my mall? And what if I certainly don't want you in my bank? So you have to look at all these things and then say, is technology going to solve it? There isn't one magic formula, but I think it's like physics, right? So it has this, what's it called? The unified equation, right? So yeah. The thing that has everything in it. And that's what we are trying to do. We're trying to come up with that thing so that it's all inclusive.
When we decentralize and we reorganize amongst like-minded individuals through the internet, there has to be, in some ways, sort of a higher standard to make the systems work. There is nothing that can replace physical proximity when it comes to motivating individuals. And it's not just the threat; it's just the social norms that we create living in a society. So when we try to duplicate the concepts that have gotten humanity and certainly the middle class of the United States where it is today, and why maybe it's ending to some extent, is we need to understand what those things are. What were the mechanisms that got us here? Do they work in a modern construct? My view is humans haven't changed in the last 400,000 years as far as the way their brains work and their emotions. Therefore, probably not the next 100,000 years either. It's utopian to think that human emotions are going to change. We're emotional creatures. Therefore, it's very important to understand what are the emotional underpinnings that make these systems work. And Faisal beautifully stated exactly how it works on a local level. How do we translate that into technology? I think, unfortunately, when it gets translated, it becomes utopian. It becomes untenable. And it's always built to scale because we all want to make a lot of money. We all want to have $1 trillion unicorn, whatever. And the reality is some of this stuff is not going to scale. And it's not going to be a unified field theory like Faisal mentioned. It's going to be hyper-local. And I think if we can use technology to aid hyper-local involvements, we're going to do phenomenally well. And I think if you really look at the arc of human history, that's all we've ever done. We go from hyper-local to large scale breaks down, and it goes back to hyper-local. This cycle has never changed throughout human history. And it's not just 3 times. A lot of people think there's only 3 big cultures. If you really study history, it's more like 350,000 times that these cycles have gone up. And some of the more, I don't want to call them ancient cultures, but some of the cultures that Faisal brought up are still operating under ancient principles. And whether or not that's good or bad, because maybe they missed a couple of industrial revolutions because of it, it doesn't matter. It ultimately is going to come back to personal responsibility. I don't know if you have to be physically in proximity, but you have to somehow simulate that responsibility that's required. And responsibility is more important than reputation. A lot of people are going to have problems with that.
I mean, in some ways, the banks have an unfair advantage over just pooling people for collective micro lending systems. The banks actually receive money from the government that they can loan out at. We were talking about this a little bit before the show, that they can loan out to people. So they're effectively creating money, and you can't do that if you. I mean, we print money. We, as in the Federal Reserve in the United States, prints it, creates new currency into the system, and then that money is given to banks who then loan it out to people. And as a system of a collective network, say on a decentralized platform, they're not introducing new money. So in some ways, they're constrained by the limited fixed currency in that network. And I wonder if that's a hindrance, if that structure is a relic of the past. Versus the way that it will be done, fast forward 100 years in the future.
Mike, it's a political construct primarily, and banking is a political construct. That's a fact. And if you look at how money is created and how money is distributed, central banking, it's all a political construct. So the question is not so much a technology question or even a banking question. Has nothing really even to do with finance. Ultimately, at the end of the day. It is, do you believe that political constructs as they exist today will continue on into the future? And, you don't have to be Nostradamus. You can look at the cycles, and there's going to be an up and a down cycle. And you could look around the world. What is the way of the world right now? What is going on politically? What's going to happen in 2020 in the United States? What's happening in Europe? And there is a cycle that's taking place. Now, what sustains through that cycle that we call a banking system may be interesting, because the last collapse of the banking system, let's put it this way. The 2008 collapse of the banking system, what it was, the credit reporting systems saved nobody. The credit reporting systems as they existed gave credit scores for individuals who did in fact default, in fact didn't have the funds to pay their loan, and on and on and on. So we learned something by that, but we did not want to change very much. So we just said, we're rejiggering the numbers on what is a FICO score. Don't look here. Yeah, I know that really that person should have had a 200 FICO, but we'll change it. They're readjusting it, and it's all well and good now, but if you look at the 1920s and what happened then, and if you look at the 1800s, we can keep going further back. There was minor banking fiascos in the 60s and 70s and 80s, and the credit and loan, scenario that essentially put the credit and loans out of business in the 70s and 80s. All of this is a learning process, but it's also a creature of politics, rules, regulations. So what happens is something happens, people rise up and say there ought to be a law. Then, of course, people whose job it is to make law says, oh, now I get to do something. They create a law. Every law has a series of unintended circumstances that surround it. Every single law in this country has built unintended monopolies. And I put quotes around that. I don't know if they are proper monopolies, but in a sense, they favor usually the incumbents. So the end of the story is sort of whatever's going to come is either going to come about by a series of rules and regulations that favor the incumbents. And we're sort of out of the disruption phase. I mean, we lived through, I would say, 1996 to about 2016 will be considered the great American phase of technology disruption. We're no longer in that phase, unfortunately. And
nice.
I know a lot of people are going to be upset over that. Yeah. So the disruption phase has changed. Now we are in a different phase, and that phase is going to be relabeled and renamed. A lot of it has to do with us. What we're talking about is looking at institutions, understanding how they got there, understanding how they stay there, and understanding how we as individuals and as a society can continue on or change it. And having all these different ideas and discussions is the beginning of that. It's a beginning of questioning, does it have to be this way? Does somebody that's unbanked needs to get banked? I mean, Faisal just brought up a beautiful concept. Some people couldn't get banked if they wanted to because their social structure in the country and epoch in which they live disallow them from that involvement. So that's not even a political thing at this point. That's a philosophy thing.
So today there are 2.5 billion people on the planet. Of how many people are on the planet?
7.
10.
Seven. We're approaching 8.
I thought it was more than that. How many people on the Earth? We got a Google result of 7.53. Yeah. Wow. I thought it was less higher. Okay. So it's significant. 2.5. As a last question here before we wrap up, I want you guys each to give a number, and we're going to circle back in 10 years, and we're going to see who wins. How many people are unbanked in 10 years? 2.5 today, 7.53 total, and we're talking about absolute numbers, not percentages. How many people will be unbanked in the year 2029? Brian, what's your guess?
If we continue on the arc and technology continues the way it does, and there are no, effects that change the arc of technology, let's call them natural effects or man-made effects, there will be no significant number of individuals that will be unbanked. There is a political, philosophical, and financial, and there's so many reasons these people will be pulled into the system. So in 10
years, you're rounding 2.5 to 0, effectively?
Pretty much.
Okay.
And whether or not that's a good or bad thing, I'll let 100 years from now decide that.
Faisal, what do you think?
I wish I shared the optimism of my friend here. But I will say 1 billion. 1 billion. 1 billion people will still be unbanked in another 10 years.
Yeah, I think I'm somewhere in between there. I'd say 500 million, somewhere between the view of 10 years eliminating those who are unbanked.
It's the way
it's fascinating.
It's the way the statistics are counted. You can never have 100%, never have 0. But, 1 billion, still 1 billion from me.
Yeah.
Yeah,
well, guys, fascinating show.
Obviously, it's a counting issue, but here's the thing you have to ask yourself. What will you call a bank in 10 years? That's why I'm kind of waffling my bed here.
You guys
didn't establish what you call a bank, because what we view as a bank will be something entirely different. What I view as a bank is getting yourself financially registered into a system. And that's going to be the interesting thing. It's whether or not that's a governmental entity or a quasi-private entity. Everybody's going to be registered into this financial system in one way or another. And when I say everybody, you never can be 100%, but pretty much everybody. Or you're going to be persona non grata in this technology world.
Yeah, maybe as soon as you're born, they take your DNA and they just put you in a database, and all of a sudden that's the new the new credit report system.
Yeah.
All right. Well, guys, this has been a fantastic conversation. Just really interesting to dive into the world of the unbanked, what statistics are out there as far as where it's centralized and what the future may hold. So hopefully that was insightful. It was for me and hopefully for our listeners. And until next time, have a good one, guys.
Great show, guys.
Thank you.
Thanks.
Bye-bye.
The views and opinions expressed on any program are those of the hosts, co-hosts, and guests appearing on the show and do not necessarily reflect the view of the owners and producers of the show. Paid advertisements in form of audio announcements may appear throughout the show, including this one. Advertising can also include print and other digital formats. The owners and producers of Around the Coin do not endorse or evaluate the advertised product, service, or company, nor any of the claims made by the advertisement. All programs are subject to a one-time charge for professional editing fees, for which the interviewing guest or guests may have contributed towards. The owners, producers, hosts, co-hosts, and guests on the show are not financial advisors. Any investment advice or opinion cited during the show is for information purposes only. None of the content is intended to be investment advice. Seek a duly licensed professional for investment advice. If you believe there's been any violation of your copyright, trademark, service mark, or any other type of intellectual property, please inform us in writing by sending an email to legal@aroundthecoin.com.